Good afternoon, morning, whatever time of day it is that you're listening to this. My name is Jaden Bax with Avenue Financial from Calgary, Alberta. Joined as always by my cousin Mike Parkinson of Dominion Lending Centers. How are you doing this week, Mike?
I'm doing really well, Jaden. How are you?
I'm loving life, buddy. And this today we've got a big topic, something we're going to cross post across our weekly tip and our new to Canada portion of the videos. So we're going to be talking about insurance. And so insurance is something that you are going to get sick and tired of hearing about during the mortgage process. There's multiple types of insurance. None of them cover the other one. They're just incredibly specific to incredibly specific situations. And the biggest thing that I find is that clients think because they have one type of insurance that they don't necessarily need the other one. So we're going to talk about what they are, which ones you absolutely need for a mortgage, which ones we legally have to offer you, but you might not need, and which ones we think that you might need in the name of the lender, but should also probably get for yourself. So let's take it away. Do you want to start with mortgage default insurance, Mike?
Absolutely, Jay. So as we talked about in the past, if you put less than 20% down on your purchase, then you have to legally pay mortgage default insurance in Canada. And what that is there's three different insurers, and they all charge the exact same premiums. They have a couple of different policies amongst each other that are different. And different programs, but for the most part, they're similar. So that means if you put 5% down, you pay a 4% insurance premium that gets added to the mortgage. If you put 10% down, it's 3.1. If you put 15% down, it's 2.8. It all gets added to the mortgage. If you put 20% down, you don't have to worry about it. So those people that put between 5 and 19.99% down, those are the ones we're talking about. So what that means is if you buy a house and you walk away from your home, the lender's insured. Okay, it's like a life insurance premium for the lender. So every time you buy a house, you're like, oh, what's this extra cost? Why am I paying more based on my down payments? Because the mortgage default insurance. So it's been around for years. Insurance premium have changed. They've gone up quite a bit over the years since I've been a broker. I mean, I remember starting out and they were way less than they are now. I guess it's just risk pricing in, just like anything else. So that's mortgage default insurance. What are you going to talk about next, Jay?
Yeah, and so that can actually, like, there's other programs you might find. Well, why is my mortgage default insurance 6.5%? Well, you might be doing a borrowed down payment, right? There's other things, but those are the basic ones Mike talks about. But what I get a lot is that people are going to the lawyer, and the lawyer is sending them, they've gotten their instructions, and they're sending out to the buyer. Okay, when you come, please come with your home insurance, basically fire insurance, replacement insurance for the home. And I get clients coming back sometimes. Well, don't I already have insurance? I thought I got that, that one that was on the mortgage. And no, you
Totally
have
different. Totally
yeah,
different.
totally different. That's for the lender. That's if you walk away from the house that the lender isn't going to lose on the back end. This is, basically the lender is lending you the money against the value of that home. And if that home burns down, or if there's, a catastrophic flood or any number of things, the value of that home is nil. It's nothing all of a sudden, right? And so basically what all lenders want is a total loss coverage. They want to be listed as a first loss payee, so they get paid out first before anything else. And they're basically same thing. They're in the one way they're protecting the integrity of the loan on the mortgage default insurance. On this side, they're protecting the integrity of the asset, the home that you're living in, right? And so if you're in a condo, you might also need, I'm blanking on the name. What's the type of insurance in a condo, Mike?
Personal content insurance.
Personal content, right? So there's those. That's another one that basically it usually breaks down into a monthly cost. And so people, when they're going through things and we tell them what the mortgage cost is going to be, oh, that's great, but they might have forgotten, well, I'm going to need that fire insurance, that home insurance. I'm also going to need to pay my property taxes. So those two things add up. And then, as we're going through the process, we also actually have to offer people life insurance, right, Mike?
Yeah, like as brokers, we're mandated by law to at least offer quotes for or referral quotes for life insurance. And this is, again, completely different than the other two we just talked about. This is something that you can either accept or decline. You do not have to have life insurance in order to get your mortgage. We just have to legally offer it to you, just like your bank, if you're signing with a bank, or even monoline lenders offer it when you're signing with your notary or lawyer in the end. They're trying to sell it to you as well. And again, we're not trying to sell it to you. We're just trying to show you that, are you covered financially? Are you going to be okay if somebody passes away? If there is the other person going to be okay? So basically ours cover, if something happened to you, you pass away and you've applied for it and have been approved, it's going to pay your mortgage off. Okay. And then there's disability insurance, which also covers if you get injured, it'll cover a certain amount. It'll cover paying your mortgage for a certain period of time. So that's completely different than the ones we just talked about. And there's even another insurance, Jay. What is the next one?
Yeah, so title insurance. So now you're back at the lawyer again, and he's giving you the breakdown of what you need to pay for. And just about every lender that you're going to work with is going to require that you pay for title insurance, and that's going to be somewhere between $150 and $300 depending on different things, and that's in the name of the lender. And so what title insurance does is it basically replaces, in Alberta, I'm sure it's called the same thing in BC, but in Alberta it was always called a real property report, right? Yeah. And so it replaces that in a way that if there are any things on title that aren't quite right. So like, let's say your neighbor has
you're encroaching on somebody's property or something.
Yeah. And you need to fight that. That pays for the legal costs of that. But when you go in, that you're buying that in the name of the lender. So if the lender needs to do anything, they'll use that insurance to pay for it. You can also at the same time buy a policy in your personal name to take care of that. And I strongly suggest that anybody who's going into a lawyer does that. It's again a nominal fee in the range of a couple $100, one-time payment, and basically any of those kinds of things that come up. If we've been seeing, I don't know if people have seen across the news, but people are selling houses that don't have owners in them at the time. And so they're putting themselves on title and selling the house. Title insurance is something that can help you pay for the legal costs of that kind of thing. So so that's there as well. Honestly, between I'm going to offer you life insurance. Mike's going to offer you life insurance. Somebody else is probably going to offer you life insurance during the lawyer signing because the lenders always offer it. You're going to have your title insurance and this and that. You are going to be full and sick and tired of insurance by the time you're done with the mortgage process. But we just want to put that out there just so everybody knows, there are a ton of insurances and they're different. They're there for different things. We're always happy to discuss any of this. If you're, signing with a bank and you've noticed all these extra charges on insurance or things like that, give us a call. We're happy to discuss what it is and how it impacts you. If you're looking at getting an idea of what the total cost of your mortgage might be, we're always happy to have a chat about that too. We can't obviously tell you exactly how much home and auto is going to be on a monthly basis, but we can give you an idea of what that would add on to in terms of being on top of that and your mortgage and your property tax on a monthly basis. So yeah, always I'm full up to here with stuff about insurance. It's something that's a constant in our industry, and we're always happy to have a chat about any of it. So thanks so much for chatting about this today, Mike. We'll see you next week, buddy.
My pleasure. See you next week.
Okay, bye, buddy.